Hey everyone, Les here, Chief Analyst of BG Trading in Australia. Today is 11th of July 2024 and I will be talking about CETTIRE Limited and Kogan Limited, which both are controversial retail stocks that a lot of people loved and other people hate, and the savvy ones they manipulated to make money. The reason I'm bringing those stocks once again now here in the channel is because they both are trading a technically discounted price. And on my opinion, based on my fundamental and technical analysis of those two stocks, they are currently offering very, very good value. We're going to dig quickly into some of the key fundamental metrics why I like those two companies. They have a different business model. CETTIRE is more like drop shipping type of thing, and Kogan does have warehousing, their own brand. So it's completely different models, but both, on my opinion, have their own competitive advantage, especially CETTIRE Limited. The reason I think CETTIRE Limited has competitive advantage is because they are kind of a very successful like drop shipping model. It sounds really simple, but they know how to deliver, they know how to sell, and they know how to break into a new market very successfully at maximum profitability, minimal risk, and minimal time. That's exactly what we want into a business deal, into a company, into a transaction that you're going to be doing. You want to get involved into something that has a minimal risk, maximal profit at a short period of time. That's CETTIRE. Now, Kogan is a different story, but they have been turning around their business. Even though revenue has declined a little bit, the profitability has increased quite substantially from a net loss position back into a net profitable position, with not only ongoing buybacks, but also start paying dividends, interim dividends once again. So that's why I'm bringing those two stocks here. Let's have a look. I just want to remind you, this is not a financial advice. It's just from BG Trading, sharing with you how we apply BGS 20 strategy together with our VP members to trade the stocks for 20 to 40% profit within a 1 to 3 month time. That's our goal here at BG Trading. And very tight stop losses, so we can protect our capital and at the same time maximize our trade profitability. If you like the content, please subscribe to the channel, share this video with someone that you believe would be interested, and hit the like button. Also, be free to add any comment at the comment sections in there. Also like to invite you to become a member of our free Facebook community. We call that Buy, Grow and Sell Strategy for share traders on the Facebook. Details at the description below. We post a lot of great quality content, conversation with our members about potential buying opportunity stocks that are set, prone for a rally, and much more. So make sure you are part of this network, this community. Let's start with CETTIRE Limited, CTT, the ASX code. This is a company that has been controversial because there's a lot of bad press about this particular stock. First, start with CEOs and directors selling the stocks and part of their stocks, and then even see the CEO selling every 6 months. Now, whether this is because they knew the company would stop growing is another thing. But obviously, it serves as a red flag for the market that start when the stock was trading at between $3 to $4, and then after that, an Australian Financial Review came up with investigation about duties and also potential tax evasion in US. And not to mention about the company also reselling a fake products. The company came up and sort of explained themselves, and apparently they were able to show the market that they are complying with duties and also with tax in the US and not selling fake products. However, there was enough to shake the market and put a lot of stock traders out of this, or investors out of this company. As you can see, the stock has fallen from almost $5 all the way to $1, which is now trading at $1.35. Once again, the reason I'm like to bring this stock now is because it is trading a technically discounted price, and if we focus into the business itself, the numbers, then there are more than enough reasons that why the fundamentals also support a potential rally from the current levels. And I see, according to the chart formation, right now I can see that the market start finding value with those big green candles and potentially higher volumes to the upside over the last couple of weeks, since the stock has crashed to $1.05. Now, back into the fundamentals, we want to look into the competitive advantage, and some people say there's no competitive advantage on this company, but let's go again what you mentioned before. So you want to be involved in a business that is highly profitable at a minimal cost and minimal lead time. So this company has proven to be able to break into a market at a really fast pace, grow its sales really quickly and effectively in a successful way. Whatever they do in terms of marketing campaign works, and has been proven that. And they're now breaking into Chinese market. They have launched the platform in China and expanding into cosmetic. Not only high quality branding, like upper class branding clothing, but now into cosmetic as well. So no inventory business model, delivering capital efficiency, growth, and compelling risk reward. That's exactly what we want in any transaction. Maximum profit, minimal risk, and quick delivery of those profits. Obviously, that brought to a lot of so-called analysts' attention, that start sort of digging into potential problems with this business model, whether it's sustainable or not. Look, this is another thing for the long term. What we're looking here is mid-term trading opportunity. And I think this company is not only going to be very successful in China, but Chinese market's huge. Huge in beauty, huge in the high brands purchasing. So I think, look, this is the outlook is positive, especially now with the share price at such lower price. Another thing I wanted to show you is look at the growth pace for this particular company. So revenue has been growing really quickly, but so is the net profitability. The net profitability has also increasing quite substantially. The company has become profitable in FY23 and also going to be profitable, most likely going to be profitable in FY24. Which brings to a sustainable fundamental level. The EBITDA has been increasing as well, which is exactly what we want to see in any particular stock that we wanted to be exposed to, having a positive outlook. This is the gross revenue from emerging markets. You can see solid growth from 25% to 31%. Recent update has triggered 40% sell-off on the stock. Why we thought that was an overreaction, which I still think that was an overreaction. People are focusing such short term, and most of people forget the long term and forget actually to look into what the company is actually delivering in terms of numbers. So here again, not just being positive, but I'm actually highlighting the truth of this business. Strong year-on-year revenue and sales revenue and adjusted EBITDA growth. Successful launch in Chinese market, opening significant opportunity to grow. And I want to highlight this. Chinese market is huge. And also, the company has improving customer relationship and stable conversion rates in key markets with increasing retention of clients repurchasing on their website over and over again. So this is very important because we want people to keep purchasing over and over again. One thing I have noticed that there's a lot of negative reviews, but then that is across all the retail, like online retail. The experience is always depends on the third party delivery companies. So they obviously use many different courier companies, and a lot of the courier companies they staffed up. So that's the truth. Now, regarding the selling fake products, the company has proven to otherwise. So there was some speculation there since I was selling fake products. So I don't think that is the case. It hasn't been proven yet. So if it hasn't been proven yet, it's just fugazi, which means doesn't exist so far. It's highly manipulated stock, highly shorted stock, can go up and down in a very, very fast pace. Currently trading at $1.33, has held on the $1 hypothetical support, and the latest chart formation shows a very interesting, constructive and potential buying opportunity here, where, as we can see, some high volumes of the stock sort of bouncing back, and today again up more than 10% in what's going to be a higher volume than the days that the stock was falling, which is effectively is positive. There is small resistance here around $1.40, but as soon as it breaks out, if it doesn't bounce back towards $1, if it breaks out $1.40, that could go back to $2 in a very quick pace. The market is expecting these last couple of quarters to decline in terms of profitability, but I'm still think the company will deliver higher profitability than the last financial year in FY25 for the full year. And if that's so, there's no reason to think the stock will crash from here, especially because it has already fallen over 50%. Let's just measure here. 75% actually has fallen 75%. So people has asked me that whether the stock could go to 30 cents, as it was 30 cents back into in FY, like in 2022. In calendar year 2022, went down to under 40 cents. But I want to remind you that in calendar year 2022, the company was at a net loss. It wasn't net profitable as it is at the moment. And therefore, the current fundamental context is completely different. Now, let's take a look on Kogan. Kogan has also fell quite substantially, 52% since the last financial update. And that is once again to do with the latest 3 CPI print have come higher than expected, which is a negative for most retail stocks. If you look into even the leading ones like Temple Webster, they has also taken a deep fall. TPW, in fact, has fallen about 33%. Could fall further. Back in Kogan, this is what I wanted to show you. We have also put together a comprehensive fundamental analysis about Kogan, and that's one of the reasons we like the company, because if you look into the key fundamental metrics, which is net profitability, the company became net profitable from a previous net loss year. In fact, if you look also in the gross sales from the platform, it keeps on growing. Although the revenue has shrunk a little bit in the first half of financial year 24 in comparison to financial year 23. However, if you look at the net profitability, has growth from negative $23 million to a positive $8.7 million, leading the company to open for buybacks and dividend payments, showing the confidence, the commitment towards investors and pretty much investors. So obviously there are also some bad media and some management misleading in the past, but that is not the case at the moment. Okay, so then obviously put some analysts to be a little bit skeptical about holding the stock for long term. So the company is now currently trading at technically discounted price with improved net profitability and potential market overreaction for the current inflationary numbers. So the upcoming CPI will be released in July 26. That will have direct impact on retail stocks like Kogan and CETTIRE Limited. And I wanted to highlight, if the CPI comes lower than expected or in line to expectation, I see a lot of value in those two stocks at the moment. The latest share price development shows this sort of reversal. Shows that the market was selling off and all of a sudden found value at the current levels of $4 and enhances the strength of this hypothetical support line at $4 with a strong buying activity at the following day, which is today, with the stock currently trading at $4.26. I think there are a potential for easily 20 to 40% upside within the next 3 months. Obviously, the current macroeconomic scenario is not very favorable, with inflation still high, but I wanted to remind you that the market look towards 6 to 12 months from now, and we are most likely entering into a monetary easing cycle. So if we don't see interest rates cut this year, we most likely can see, we're likely to see next year, as the interest rates, multiple interest rates hike in Australia that we saw 13 over the last 15 months has started to take effect. I'm highly involved in the property market, and I'm talking to different property agents. We can see they have been seeing a slowdown in buying activity, which leads to more distressed sales, and also the proof that interest rate hike has started taking effect. So this is our opinion on Kogan and CETTIRE Limited. Once again, we see significant value. There's also some bullish divergence here with Kogan. If you look into the RSI, showing that there is value at the current levels, and the market is ready or almost ready to potentially start buying back into those into the sector, into those particular stock. By the time CPI comes lower than expected and a interest rate cut happens, those stocks will probably have already rallied, and they will most likely be too late to take a position. So that's why it's always good to look into stocks that has fallen most and has still retained its key fundamental metrics in the high levels of quality. High profitability, still technically still growing or turning around from a really bad period, which is the case of Kogan, and which is the case of still growing, is the case of CETTIRE Limited. Hope that was valuable. Let us know what you think about those three stocks, and then I'll see you in the next video. Bye.